There are many different ways to trade. The market gives us so many different opportunities that we can take advantage of, depending on what our lifestyle and our timescales are. In this video, I'm going to share with you a very simple trading strategy that I used in the space of about 20 minutes, and I carried this out at 8 o'clock in the morning here in the UK during the London opening session. I managed to bag 2 times what I was risking for the trade, which gave me a total of about $200 profit in 20 minutes. This was day trading the DAX, the German index market, in my trading account with the prop from the 5%ers, who I will talk more about later in the video. I followed a very simple process. I carried out my technical analysis prior to the trade and then executed my trade. I automatically set my stop loss order and my take profit order, and I just watched the trade work out. This trade was taken using pure price action, top-down analysis, and incorporating a Fibonacci retracement tool. I don't use any other indicators in my trading. I like to keep it clean and tidy. All of the software that I will be using is linked in the description below. If you've not already got a copy of my free trading plan, make sure to download that for free. It talks you through how to set up a trading plan if you don't already have one. And please remember to like the video if you enjoy this content. It really helps me out, and make sure you are subscribed to the channel below. Let's get straight into it. Just opening up my broker here before we dive onto the charts, I always find it so important to share with you my broker data so that you can see that these are real trades that I took. There are a lot of traders here on YouTube, and not all of them share their trading data, so you don't know whether what they're sharing is actually honest or not. I want you to always know that I am completely honest and transparent in my videos. I find trust to be essential. So in my history tab here, you can see I've got a couple of trades I took this week, and the first trade is the one I'm going to share with you now on the DAX, which made me a total just shy of $200 profit. This trade was taken on the Monday at the start of the week, and I'm going to go through the entire process step by step with you now. So when I started my trading day, this can pretty much be carried out any time prior to you trading. I carried out top-down analysis, and I always start on the daily time frame. The daily time frame is the highest authority time frame. It is a time frame that a lot of corporations, institutions, and central banks use, so it can give you a lot more reliable information when it comes to plotting key levels. I like to look at a couple of things on the daily. First of all, I like to zoom out and see an overall macro perspective of what the market is doing, looking at market structure. So we can see here that very simply on the daily time frame for the DAX, price action has been ranging for some time. Pretty much since the end of May, we haven't been making any higher highs or higher lows. Prior to that, it had been coming up in an uptrend. Now last week was interesting. We got a close below the bottom of this range. So immediately you would think that price would be dropping. It's not always the case. Once I got a macro perspective of the market, in this case we have been ranging and we've broken the bottom of the range, I then like to look at the previous daily candlestick. So on the Thursday, we got that strong bearish candlestick down, closing below the range. However, on the Friday, we got a strong push up. Now, it wasn't an engulfing bullish candlestick. It didn't fully engulf this previous candlestick, but it did push up more than 50% of the size of this bearish candlestick. And although we had a little bit of a wick rejection here, there wasn't a lot of wick rejection, which means that we're probably not done retesting the highs here. That meant to me that if we got a break above this candlestick, above Friday's high, there was a high chance that price would continue going up. That is all I pretty much do on the daily. There weren't any key levels to consider because we have this range, and I like to look at the most recent candlesticks. Once this basic analysis is done to give a bias, which in my case would be a break of the previous high or low for continuation of the trend, the intraday trend, then we drop to the 4-hourly. Sometimes the 4-hourly time frame can give you a lot more information to analyze, to plot key levels, and to help formulate a trade plan. Sometimes there isn't actually a lot there to help. In this case, it was a little bit of both. The thing that stood out the most to me was that last week we had this downtrend where price was making lower lows and lower highs, a lower low and a lower high, We had a big push down, a pullback, and then this very large bearish candlestick which closed at the bottom of the range. Now, until price broke this pullback level here, it would still be considered to be in a downtrend as part of this downtrend. But again, I felt there was a high chance of price wanting to retest these levels right here. In terms of the most recent candlesticks here on the 4-hourly, during the Asian session, price had opened up and we had kind of not had a lot of movement. We've got this little bullish candlestick down, and I thought there may be room for some sort of support to be found here for a potential bounce to retest the highs up here. But at this point, this is when I like to move to a faster time frame, in this case the 5-minute time frame, to give me some more information. I need more candlesticks so I can truly analyze and get a perspective on if there is a valid trade opportunity. So I dropped to the 5-minute time frame. This was just before 8 o'clock in the morning, just before the London Open. And this is the same information we saw on the 4-hourly, but we have a lot more candlesticks. So we can see this pullback down, the sharp pushback up to that key level we drew on the 4-hourly, and then this huge gap down where price broke the low of the range. Now we did have a pullback at this structural point here, which tallies up with where I drew the other line from the 4-hourly. And price has broken above this level. Now this was a lower high formed because we had a break below this key level right here. We got a break where price closed at this point here after breaking the range. And it was after this point that we pulled up and we had a structure forming here that only got confirmed once we got another pushback down and a close below the range down here. Because of the way the structure is formed, this makes this the new lower high. And once this got broken here, that was when I considered a potential long in this case for an intraday scalp. Because the overall trend has been coming down, I wouldn't want to overstay my welcome on this. So the question would be, well, where to get in long? And what I like to look at is once we have a break of a structure here, this structure broken, the break happened here. And after we broke, we pulled back down and we made a low here, which only got confirmed once price pushed back up and broke this structure right here. We then had another pullback down to this level, retesting this key structural level. And then once again, price pushed up with the current open and high of the day closing above this structure. Let's zoom in on this area of price action. I'm going to add on an indicator just to make it easier for you to see this. And this is the previous daily high and the previous daily low. And this blue line is Friday's high. So you can see that during the Asian session, we already broke and closed above Friday's high multiple times. And again, during the run up to the London session. I'm just going to take a quick moment to talk about the high stakes program that I am trading with the 5%ers. They actually have 3 programs available. So they have the hyper growth, which is a 1-step program. I passed this program in 2024, accessing a fully funded $40,000 account. And I'm currently working through high stakes. I've also got my eye on the bootcamp program for trading my trading bot. The high stakes program is a 2-step challenge. That means you have to go through the challenge twice. The first time, the profit target in step 1 is 8%, and in step 2 this is reduced to 5% with an overall maximum loss of 10% on the account. So personally, I am risking 0.5% per trade, which gives me a nice buffer to keep me away from that maximum drawdown. I have my own risk plan in place when it comes to trading a prop account. If you want to know more, let me know in the comments below. But what I love the most about this plan with the 5%ers is the fact that it has a 0 amount of time to pass the program. I can take as long as I need, so it removes the time pressure. I only need to focus on keeping my mindsets and my emotions in check. If you want some more information, I have created a separate video, or of course you can find out some more information about the 5%ers if you feel ready to have a go for yourself in the description below. I've just carried out top-down analysis. We have just analysed in more detail on the 15-minute time frame, looking at market structure, higher highs and higher lows, exploring the behaviour around these key daily levels and getting a bias on the day. As it stands here, I am looking for a short-term scalp to the long side. This is where I would then look to incorporate my Fibonacci tool, my Fibonacci retracement tool, and now I have my structure points to use for that tool. So let's see where this entry lands. I like to go from the previous structural point for the long, which in this case would be this one here. It is the most recent higher low, and it has got extra authority because it is rejecting this line here, which is the structural key level of the previous structure point. So I'm going to drop my fib tool from that low and I'm going to drop it at the current high of the day. And you can see that we've actually already got a reaction in this area, the optimum trade entry, which is the 79%, 70% and 62% levels. Traders use Fibonacci retracement tools in different ways. Some like to get in at the 39% level, others at 50%, and I prefer to get in on a much deeper pullback, which links up to these three levels here. And that's what we see in this little dip down right here. Price comes down and we get a little inside bar, push up, and then price pushes back up. This would be the best place to go long. Now, obviously, I missed this initial entry, but I thought that there may be a chance that during the London, we get a drop down and retest those levels. So I put a trade plan at this point here. Another area of confluence is the fact that it coincides with the institutional price levels. These are key levels located at the half and the whole dollar mark. In this case, $23,250. That is where I place my plan for a buy limit order. For my stop, I was using a 50 pip stop. You may be thinking that's quite a wide stop, and yeah, it is, especially for the 5-minute time frame, but the DAX can move very quickly and I like to have my stop a little bit wider so that it is below this key level, this structural point. Plus, if I set my target to 2R, which would be 2 times what I was risking for the trade, it's not much further past the current high of the day. I know from experience that the DAX can make these kind of quick moves with high momentum. Once I set this plan using my Fibonacci, I then just review the trade to make sure it makes sense. Have I got my bias right? It matches up with the daily because we're following the previous daily close, which was bullish. We've had the break above the previous daily high. So intraday, the trend is pushing up. We've incorporated key structural points and this key level here. I've used my Fibonacci and we've even got a candlestick pattern forming. If price comes down and triggers me in, that would be a double bottom pattern. I've got multiple points that support this trade plan, which for me makes this an A quality trade, and that's all I need to set this in my broker. So then I set a buy limit order using these details here, my stop loss order and my take profit order. All of my analysis and planning is carried out on my TradingView charts, and then my actual trade itself, I set the orders in my broker in MetaTrader 5. I set trade alerts and then I put it away and wait to see what happens, and this is what's happened. Sometimes trading doesn't happen this quickly, and it's really nice when it does. Pretty much the London session opened at 8 o'clock and we got a large drop down to the optimum trade entry, triggering me into this trade long. And as you can see, we did get a lovely double bottom pattern. Because the second drop down, price didn't close below the first one. If it came down and closed lower than the first, I would immediately be alarmed and probably would be looking to get out of that position break even because it had violated the structure. But it didn't. We got a large wick rejecting the low, and again with the second candlestick here, a large wick rejecting the low. And then on this third candlestick at 10 past 8, price pushed up with some strong momentum, taking us back up to the high of the day above the previous daily high. This was lovely, and all I needed to see at that point to then adjust my stop loss to break even to protect my profits. Then price pushed up, and at 20 past 8 it hit my take profit order. So in the space of 20 minutes of getting into this trade, I was out again with my $200 profit. Not a bad start to a trading day. Key takeaways from this trade that may help you out in your own trading journey is to obviously follow your trading plan. If you don't have one, make sure to download my free one below, set it up, fill it in with your own details or create your own plan, but it helps. It's your roadmap to guiding you through the markets. And once you plan a trade, before you jump in, to avoid those irrational, emotional trades, just check the points on your plan. If you can remember them in your head, brilliant. If not, look at what your plan says. Go through each point and make sure that your plan that you have got in front of you on the charts to get into a trade matches your overall trading strategy, your plan. The more frequently you do this, you'll find that you can avoid those emotional trading decisions and sometimes jumping into trades that aren't even good quality trades. If you've enjoyed this video, please let me know by hitting the like button, and don't forget to subscribe to my channel. Thank you for watching, and I'll catch you in my next video. Bye.